Hello and welcome to another update video on Solana. I'm here on the weekly chart. I think it's important to start on the weekly just to show again the relevant levels that now matter. And also I want to repeat what I said yesterday, which is that when we reach key support zones on a time frame like the weekly or the daily, then of course, we have to then pay close attention to the microstructures in those zones to identify possible reversal patterns, because until the micro doesn't show a reversal signal, or the micro doesn't show some kind of upside momentum and a break of micro resistance, there's no sign that the bulls are showing up, and there's no sign that the upper, or let's say the larger time frame zone actually causes a reaction. So they are just zones to watch. They are just areas of interest, pivots basically, where decisions should be made. And the decision not to react is also a decision the market can make. And if we break below such a pivot, it means that the next one will come into focus, which is why it can be helpful not to try to front run rallies if we're in a if we're in a falling knife situation. Ideally we don't try to catch the falling knife. But we wait for reaction. Okay, I mean you can always trade anything, but you need to be able to measure your risk. Now the advantage with Elliott Wave is it always gives us for a scenario an invalidation point. So if you try to trade a scenario, maybe, or if you not try to trade, but if you trade a scenario, then the scenario will always give you a clear invalidation point. And in this case, obviously, we're tracking here in the white scenario a directly bullish count. It would be helpful, though, on the smaller time frame to see a 1-2 setup first, basically a micro 5-wave move up, so that we can measure and define the length of the C wave, because then we have a first confirmation that wave B has bottomed. So from a chart point of view, I cannot confirm any low here. We are still in a falling knife situation. But again, when the crypto market turns around and when we see a reaction, this reaction can be very sharp and very aggressive. And that, again, surprises people then. So what a lot of people will do, they will panic sell at the bottoms. And then when the price rallies, they will have to buy back. So I always hope that the analysis adds so much value that you are making, let's say, more informed decisions. Of course, I can't tell you what to do, but I can share with you the key pivots I'm watching, the scenarios that will allow you to identify the risk, and it should only really be only one source of information for you. So I mean, I often say the chart is not the trade. Many people don't understand that. The chart is not the trade. The chart is a chart analysis that shows scenarios. We reduce the uncertainty, but we can never get to certainty. And it's best to be very honest and transparent about it, because any technical analysis, any fundamental analysis as well, has limitations, okay? And the advantage Elliott Wave gives us, it's very honest about it, because Elliott Wave forces us to be disciplined, because Elliott Wave tells us when a scenario goes wrong or when a scenario is invalidated. That doesn't mean the chart analysis is wrong, it's just the scenario isn't playing out. But there are always more than, let's say, one. There's always at least more than one scenario. There's always a bullish and a bearish case. That's very important to understand. And so either way, in all market conditions, this method, this model, allows us to navigate the market with less uncertainty. But unfortunately, there is still uncertainty, and you can only navigate that uncertainty with trading strategies and tactics. So that's what you have to bring, right? But the universal analysis here helps, hopefully, a lot of people. It's important to understand that we're now in this upper support area, but there is no reaction. So if we break through, then the next area of interest that the chart suggests is going to be between $62 and $90. It's far away from where we're now, but you see, break below 117 and a move down into this zone will be likely. It helps us to structure the market a bit. I mean, in the end, also the April low could provide some support, but double bottoms are rare, actually, in markets, in contrast to what many people think, but they're actually quite rare. So the Fibonacci zones then are $90 and $81, okay? So that's going to be interesting. Obviously, we now have to pay attention to the microstructures. What I share on the smaller time frame is a detailed wave count of the orange scenario. So what you will see is how the C wave can unfold and take us into the lower support region. And also for this B wave pullback, a microstructure. I think on the smaller time frame, I'll show it in yellow, however. So don't be confused. So on the smaller time frame, what you can see is here the orange wave 3, which could form a low soon and then start a wave 4. That's basically what I'm watching for on the Ethereum and the Bitcoin charts. There are possible wave 4 bounce, which could then take us down lower into the 90. I don't have that additional zone here on the chart, but could take us towards 90 to $80 potentially next. Whereas in the yellow scenario, which is this B wave pullback, it can form a low at any point really, but there's nothing there at the moment suggesting we've bottomed. What I need to see here at the very least, I'd say, would be a break above $136.50, followed by a break above $145. I mean, any break above a swing high can be helpful, but this is clearly the most meaningful one. I mean, you see this is kind of a range here, a resistance area, probably more like around $145. Yeah, this would be meaningful. Yeah, getting a break above this zone. That is needed. And then we can shift the focus to this zone. And that reaction can obviously occur from the support region. But so far, the market has simply continued to follow the pathway lower. One more low was expected even in the yellow scenario. We're now holding around that $126 level, a level that I mentioned many times because it is, if I zoom out, again, a structural level. So this is the June low. It's quite an obvious one, yeah, and the market already dipped briefly below, but we're holding exactly there now, around $126. So the next support then is around $117 to $118. Definitely worth watching. Check it out. I can't rule out a few more downside squiggles, yeah. But overall, yeah, I mean, anyway, until we actually see a micro 5-wave move up, there is no sign of a low. And that's exactly why we do the work here every single day, because we want to identify as soon as possible a possible trend shift. But over the last few weeks, I've been telling you, we haven't got anything convincing yet, okay? All the bounces were corrective. And that's exactly why we do the work. Not because we extend movements to the downside or anything, but because until I see a 5-wave move up, there is no sign of a reversal. So it can make sense to be cautious or even bearish short term. That's the update on Solana. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then check out our X channel as well for additional updates, charts, news, and much more. There are even some additional video updates that you can find here that are not published on YouTube here on this channel. For example, the weekly Bitcoin analysis. So check it out. I'll leave a link in the comment section. Thanks so much. Bye-bye.